Hello, Zoo.
Hey Deji, how you?
Very good. Thank you
Good.
for making the time.
No problem.
Yeah, wanted to just bring you on this podcast. This is where we just wanted to know more about the lenders, about property investment and stuff. I thought you got something interesting in your space that's definitely worth expanding on. Thank you for giving us the time. Just as a way to start, if you could just introduce yourself, maybe
Yep.
just give us, before we delve into the main thing, just give us maybe a bit of background about who you are and your how long you've been in the industry and what you do in the industry in this space. So
Okay. No problem. My name is Zouhair, but everyone in the mortgage world knows me as Zoo. I'm a national account manager for Quantum Mortgages. So my main role is dealing with professionals like Deji who liaise with me on a daily basis to try and place specialist mortgage cases with a specialist buy-to-let lender like ourselves. So we are specialists in that kind of field where we predominantly will do cases and property types that more of the kind of traditional high street lenders will necessarily frown upon and not look to necessarily support. Myself, I'm coming up to just shy of a decade in the property industry. So beforehand, I'd started my journey within Lloyd's Banking Group. So I've come from a very kind of residential background where I was looking after Halifax and Scottish widows for about 5.5, 6 years. Then I entered into the specialist space working for One Savings Bank. So that was looking after Precise and Kent Reliance. Spent some time at Hampshire Trust Bank. And then, just over a year ago, joined Quantum Mortgages. So yeah, quite a bit of experience there in terms of the specialist lending area, as well as obviously with the high street bank sector. So my knowledge is quite broad across the board, to be fair, to obviously, yeah, assist professionals like Deji in terms of placing those difficult cases.
thank you. So out of interest, wanted to ask, what informed your decision of coming into the mortgage industry? And I know
Yeah.
you've transitioned into from standard um, lenders to maybe more specialist one. Why quantum at this point?
So I mean, what initially transitioned me into the mortgage space. So when I first started at Lloyd's, when I left university, I was actually in retail banking, and then I went into corporate banking, and it was just a chance meeting with one of the senior managers that worked within the mortgage intermediary space, and he was like, "Look, you've got the right attributes and characteristics." To go out into the market and sell this mortgage proposition, because I think, to be fair, if you've got them right attributes to necessarily sell a service or sell a product, and then you can necessarily apply yourself to most different areas. But I think the mortgage industry was perked my interest because, again, growing up, having gone through all the schooling systems here in the UK, it's not something that they teach you at school. It's not part of
Yeah.
the curriculum, which it should be, in my opinion. It's a huge area that I think is lacking. So there was always that part of me that was like, wanting to learn more about it, but at the same time, still using my kind of sales background. So working and looking after arguably the biggest residential lender in the UK in Halifax was a huge learning curve. And then going into the specialist lending space, I think once you've got used to the vanilla stuff, if you've got that kind of passion for property, you want to learn more about the stuff that is not very straightforward.
Yeah.
So that's what led me nicely into the specialist lending. And with quantum, with I think from my perspective, it always helps when you're working with a lender that can do a lot of the stuff that a lot of other lenders don't.
Yeah.
I love problem solving. I love addressing cases that are not straightforward. Dealing with applicants that come from various different backgrounds, whether it be those that are based overseas or those that are based here, but maybe have, maybe a poor kind of credit background, this, that, and the other. So, from that perspective, I think the two tended to go hand in hand. So, I don't think it's a coincidence that since joining Quantum that I've gone from strength to strength. But it also helps, obviously, working for a lender that has the criteria that can enable you to go out into the market. And, like I said, once me and you first met and we started talking about Quantum's proposition, there was a lot of pluses there that you could say, okay, you guys do, day one remortgages, you guys do stuff with supported living, with vulnerable tenants. So a lot of the stuff started ticking a lot of those boxes, to be fair. So yeah, so that's my kind of brief synopsis of my background.
Yeah, thank you. And forgot to say congratulations. I know you recently became you had a promotion, so
Yeah,
congratulations
no,
on
no,
that.
no.
Maybe
Thank you very much. I
if
still look after you, Deji. Don't worry. Don't
yeah,
worry.
yeah, yeah.
That
So
was the biggest fear people had. They said as soon as he goes up, we're gonna lose contact with the guy. But no, no, no. That's never
yeah,
gonna be the
yeah.
case.
I mean, we've worked together for some time now, and definitely would appreciate what you do and commend the time you give. I know sometimes we still on a chat at late 6 o'clock, and sometimes I send your email and I'm like, oh wow, this guy is on the ball. So thank you for that, and a lot of stuff you do behind the scene just to make sure that it supports us as a professional to get the job done properly. So really appreciate you on that. So yeah, I mean, with every career, you have things that excite you, things that what I mean, this is two-way question. Like two, what is it that you feel most rewarding about your career? I know we're gonna delve you've mentioned a few things now, and before now we've talked about a few things. There's a lot people will gain from this section from just getting them to the advanced level when they think about property investing. But before we go into that, I wanted to just touch on what is most rewarding for you as a in this industry, and also on the other flip side, what's been the biggest challenge, maybe with a client, maybe with a case, or maybe with the industry. So we'd love you to share something on
Yeah,
that.
of course. I would say the biggest plus point for me, if I'm really honest with you, even though I don't necessarily have that kind of end relationship with the clients like brokers do, there's nothing that pleases me more than getting those difficult cases over the line and celebrating them with brokers like yourself. Even though you don't necessarily have that direct relationship, in a weird way, you do feel like that close affiliation with that end clients when
Yeah,
you see that completion go through. And also, more importantly, what I've tended to find is when you assist brokers with those very difficult cases and you get them over the line, the relationships that you build with those brokers are ones that will less necessarily last a lifetime. So, regardless of whichever lender that I'm working with, you work with those same brokers over the last 5, 10 years. They will literally follow you wherever you go. Why? Because they've built up that trust. That if Zeus says we can do this, and I've got that history of where I've gone to other people, I've spoken to other lenders, they've said to me they'll do something, and then it's the complete opposite. That's where obviously, unfortunately, the trust breaks there. So I would say the biggest plus point for me is those kind of successful outcomes, especially on those very difficult type of cases. Um, and yeah, I would say that's the major kind of plus point in that regards.
yeah. On the flip side, what's the most challenge to you, or what?
I mean, the most challenging for me, if I'm really honest with you, and funny enough, is probably a lot of the stuff that brokers would necessarily agree to as well. Is there's many aspects throughout the mortgage journey or mortgage application that you can't physically control. You
Yeah,
can't control the valuation side of things. You can't really control the legal side of things. So unfortunately, there are aspects throughout that mortgage journey that are taken out of your control. The only thing that you can necessarily try and do is facilitate and assist where you can to try and
yeah,
make that process as easy as possible, which is,
definitely.
you know, why those listening to this podcast, I can't emphasize enough that when you're dealing with professionals like Deji and brokers who, prior to placing your business, they will come and speak to professionals like me and break down everything. So he'll go, this is the property, this is where it's located. So what we're trying to do is we're trying to nullify as much risk out of that deal as possible, and to make sure that how we present it to the valuer is exactly to say, okay, yes, it fits with us. Because I think the biggest thing that would frustrate everyone in the mortgage process, whether it be a broker, a customer, or whoever, is when you get a very superficial, yes, we can do it. Someone goes and spends all that money. You, as the broker, go and spend all that time placing the application. And then it's like, sorry, yeah, we can't do it. Well, why couldn't you have said that to me from day one? So that's the kind of stuff, to be fair, that I would say to preempt any kind of risks associated with it. But of course, unfortunately, there are cases where you try and do as much as you can, and for one reason or the other, it doesn't proceed to completion. So, you do take that on personally. I mean, that is something that I definitely do burden myself with. But I think the reason why I probably take things as personal as I do is probably why I've managed to succeed the way I've done, because I treat each case like as if they're my own. So, once they've come in, then literally I take hold of it and try and get it as quick as I can to completion. And then we move on to the next one.
Yeah, 100%. I definitely can add to that. I mean, with our experience with yourself, I think it's focus has always been very helpful to the clients, looking to at this de-risking as much as possible upfront. And I think from experience, that has allowed things to move far quicker than you would expect, and reduce the number of road bumps. Because in the industry, there will always be some road bumps, like you said, that you don't even control. It might not even be from solicitors or valuation. It might just be uh, something being found on the credit
Yeah,
for the
yeah,
client. So
true,
something
true.
very, very simple. I mean, something very simple. You feel like, oh, why is this causing an issue now? So those are some things that you never expect, but we always find a way to move things along and get the best. So, okay. So thank you for that. One of the important things I wanted us to discuss as part of Quantum, one, I mean, I know you have quite a few unique selling points, but
Yeah.
one of the things that got me interested was more on your social impact investing.
Okay.
There's a lot of traction, there's a lot of interest in that space. It's not because that's not been, I mean, from what I've known, that's been on for many years. But there is a lot of traction currently, at least from every inquiry I'm getting, from every 10 inquiry I'm getting, two to three, even four are asking, can I do supported living? Can I do this? Can I do stuff? So there's different fragments of that. So if you could delve into that a little bit for people to understand, what does this actually mean? What does this part of the investment looks like? And
Yeah.
then we can start to unravel what are the opportunities that you have in there.
Okay, no problem. So I think the biggest thing that's probably spiked the interest in terms of landlords, professional landlords looking into having these corporate leases with either social housing providers, vulnerable tenant providers, assisted living providers, is more to do with the fact that now, especially in the media, you see a lot of talk now in just about every property network meeting you go to, conference or whatever, around the renters reform bill. So there's a lot of landlords now looking at it going, now I'm thinking twice in terms of whether I want to have professional tenants in my property or whether it makes sense for me to have a 5 year lease with this assisted living provider, because now I've got guaranteed rents. So regardless of whether the property has got tenants in there or hasn't got tenants in there, if the contract states that it's for that period of time and they're paying fixed monthly rents on a monthly basis, as a professional landlord, you're looking at it going, well, surely I want that assurance over that fixed period, especially if I'm getting a 5 year fixed product with a mortgage lender. I need to have that comfort knowing that I've got that rent fixed in for that same period of time. So I think that in itself has definitely, spiked people's interest. Also, one of the biggest reasons I think is traditionally, if you look at it historically with a lot of buy-to-let lenders, no one used to accept it. So traditionally, if you had people that wanted to go into that space, they could, but there was probably only one or two buy-to-let lenders in the country that would entertain it, and the
Yeah.
interest rate would be very high. So that in itself also would put people off. But now, when you've got lenders like ourselves that will charge the same interest rates, whether it be for an assisted living provider case or whether it be for a professional tenant case, then you're now giving the landlord literally the whole option to go, I can now pick either or, and I'm not going to necessarily then suffer the financial consequences of going with, the corporate lease kind of option. So I think that in itself has definitely opened up more doors. And I think we live in a day and age now, to be fair, now, if I'm really honest with you, where people now are looking for more assurances. So the fact that you can now have a contract that's fixed in place, and like I said, giving you that guaranteed rents, if I'm really honest with you, I think most landlords would pick that option over a potential option where, you get a tenant in, they pay the rent for 6 months, but then all of a sudden they stop paying the rent. Then arguably it could take you months to get that tenant out of the property. So yeah, there's definitely added perks in terms of looking towards the corporate let kind of options.
Okay, thank you very much. Just on the corporate lights, I know um, there's a lot of advert, there's a lot of people doing corporate lights from
Mhm.
different angle. Just from an advice point of view, a lot of people are doing guaranteed rent, corporate rent in the wrong way, because unlike lenders like yourself, not so many lenders allow people to do that. So a lot of
Correct.
people are doing it, but they are not informing um, their lender, which in itself is a wrong thing for
Mhm.
what they are doing. So I think just to put a bit of caution out there, a lot of investors understand guaranteed rent and maybe rent to rent. So many things come up, but it just needs to be clear that you need to get the right mortgage to be able to support this. And that's very, very important because otherwise this is obviously considered as a mortgage fraud for
Yeah.
people to understand that. So I think, yeah,
100%. And I think sometimes as well, I think, we people have to also understand now we live in a day and age where lenders have access to more information than they have ever had access to.
yeah,
So now it's going to become more and more common in terms of if you're in breach of your terms and conditions with that specific lender, the ramifications behind it. If I'm really honest with you, some people will assume going, okay, what's the worst that can happen? That mortgage lender will just say, probably give me a slap on the wrist and say, you're going to have to remortgage elsewhere. But the consequences are much more grave. If I'm really
yeah,
honest with you, they'll put, you've got that risk of getting a marker put against your name, which then potentially could blacklist you with near enough every mortgage lender in the country. So, for the sake of saving yourself maybe 1% interest or this, that, and the other, in all honesty, it doesn't make any sense. So, yeah, speak to professionals, seek a professional advice from people like Deji and those that work within that field, because they will be able to tell you exactly which lenders will permit it and which lenders won't. Because again, funny enough, where we're talking about this point, Deji, there's a lot of people that go and place cases with lenders. They don't make it clear to them, and then when the valuer goes out, he finds out about it, and then they just nil value the property and
yeah.
says, "We can't do this." So the client's gone and wasted all that money when they could have addressed all of that by being transparent with the broker from the outset. So yeah, like with anything in life, just truth and transparency is everything.
Okay, thank you. So, yeah, so for people that are not very familiar with what we are saying now, I want
Mm-hmm.
you to break it down from a mortgage lender point of view. What is assisted living? What is supported living? What is care home? What is whatever else you have in that space, so that it's clear enough people to know, okay, this is actually what I'm doing, and this is how it works from a lender point of view.
Okay. So if we touch upon it first, so let's go with if we're just looking at it from a vulnerable tenant standpoint. So that heading of vulnerable tenant could be anyone, whether it be housing illegal immigrants, whether it be housing victims of domestic abuse, or whether it even be housing occupants under the age of 18. So there's always different types of tenant types, but they would all fall underneath that umbrella of being deemed a vulnerable tenant.
Yeah.
So you will have tenant providers. If we look at three of the biggest ones in the UK that support that space, so you've got Serco, you've got Mears, and you've got Clearspring. So those three stick out. You will find that there are lenders out there that either will only allow one of the three, or you'll come across lenders like ourselves that will allow every single one of them. But it's not to say that you are only restricted to just those three specific providers. So you will have other lenders that we are probably one of the only few that don't insist on the provider having to be CQC registered. And when I say CQC, I'm referring to the Care Quality Commission.
Yeah.
So when these providers, usually most lenders will say they have to be on the list of providers on the Care Quality Commission website to be deemed a suitable provider. We don't have that. So if you ever come across, or your clients come across, they may even have family in the industry who run their own care company. They're not CQC registered, but they want to buy property and have corporate let agreements between themselves and that company. From a quantum standpoint, that's absolutely fine. There's no issues there. From an assisted living standpoint, where it starts to get more intricate is where, as a buy-to-let lender, we will allow overnight carers to stay in our properties. So if you have children under the age of 18, more likely than not, they do require 24/7 supervision. So whether that's a carer that is permanently based at the property, or whether it's carers that are doing shift pattern work, we're absolutely fine with that. And most of the time, those type of lease agreements are the ones that most professional landlords are looking into, because they're the ones that may potentially be paying slightly more. So, the ones that provide that kind of care supervision, or, all of those different type of things are perfectly fine. Now, the main thing I have to stress is that from a care perspective, you have to be very careful when you're looking at the property class that is assigned to the property. So for me to make this clear to those listening to this podcast, for most buy-to-let lenders, they either have to lend on a property that either has a C3, C4, or those that have a sui generis property class. So one of those three. So if it has one of those three, most buy-to-let lenders in the country will lend on those properties. But when it comes to care, sometimes you may find that you will come across some that will be deemed the equivalent of like a care home, and it will have a C2 class. Now, if it has a C2 class, that's when it becomes, with most lenders, a commercial mortgage. So that wouldn't be something that we could assist with. And I think off the top of my head, there's probably only 4 lenders or 5 lenders in the country that will even entertain C2 class kind of properties. So just make sure you do your due diligence when it comes to these kind of assisted living, kind of care home kind of setups, to make sure that the local authority do not insist that it has to have that C2 class. So as long as it keeps C3, C4, or it has that sui generis on it, then that's absolutely fine from a quantum standpoint.
Okay, thank you. And from that high level vulnerability classification, that then set out what qualifies as an assisted living versus supported living and everything else in between.
Assisted living, to be honest with you, will predominantly just come down to the care supervision that's in place. So, you'll have some that will go, there are no carers on site. You literally will have someone that will just turn up, just make sure everything is okay, and then they'll just go home. That's fine. But once you have assisted living, that's when you know that there's going to be a carer there, whether they're operating on a shift pattern work or whether they're working there 24/7. Some even reside at the security. So they literally sleep there overnight. So a lot of the time, what I would suggest is obtain that draft copy from that specific provider, provide that to your broker, and then that's when they liaise with people like myself to see, is this something that we can assist with, and which product it would be that it would fall onto. But, whether it's got 24/7 carers on there or not, the pricing is exactly the same. So there's no kind of added concern, let's say, for the clients applying to say, oh, wait a minute, if I've got 24/7 carers, does that mean now my interest rate is going to go even higher? No, it doesn't mean that at all, to be fair. But we're just looking out for certain things within the lease, especially stuff around subletting. So most lenders, especially ourselves, do not permit any form of subletting whatsoever. So you just have to look out for that, especially within these lease agreements, to say, is it between me as the landlord and is that end provider the end client? If that is, absolutely fine. But if it's where the end client is saying, I can then now sublet this to other companies, that's when you're going to fall into into problems. So again, just be conscious of these kind of clauses that are in place with these leases. But this is where your broker will come in and they'll be able to review and advise you otherwise.
Okay. So from the large spectrum of people going into this sort of arrangement, you have people that are buying already procured projects that
Mhm.
already have, because I think in simple forms, people need to understand there's a social and care element and there's a housing element. And the combination of these is what brings the opportunity in the market, either as a landlord providing your property for the purpose of the housing and you're getting the guaranteed rent, or maybe for some landlord, they want to do a bit of extra. They want to work with, like you said, maybe you have your friend, you have your cousin, you have a company that
Mhm.
has the care element and they want to join forces together
Correct.
and work together and do stuff. So some investors are just like, I've got the house, I've got the property, I want to give it out on a guaranteed rent
Mhm.
to providers. Some will say, I want to maintain the house, I want a guaranteed provider to come in and we'll do the operational part of it and then the housing and then we would share the profit and stuff. So there's different ways people are doing this. So just talking on that really. And also there are elements where you have already projects already being procured. They have set out who the care provider is. They have maybe done um, refurbishment on a property, make it ready and um, ready for the type of supported living or social housing that they want, and then they'll sell that as an investment to people. So it's just a different spectrum and depends on where people come in. And recently, there are also new developments that new build um, focus strictly on maybe flats that are for assisted living and stuff. So people can go in and buy those stuff. So just for people to understand, there's different spectrum to this and depends on where they want to come in to play the game or get the investment and stuff. So thank you for sharing on that. So what does it mean then for from the care element? How does lenders see the quality or what are the criteria that come into play when thinking about, okay, we've got this lease agreement, like you said, give us a draft contract of what that looks like. What would lenders like yourself be looking at in terms of for the provider itself? What would you be looking for?
I mean, look, the main thing that sticks out, and I think every lender will do this, is whoever the provider is, they're going to do their due diligence in terms of checks that they will do on the provider. So, is there any adverse media that does get found out? So, it's a simple, Google search. So, even anyone that would be looking to get into business with anyone, you'd be amazed how much you can find just by putting in the name of the company on Google and seeing if there's anything that comes up. So, if there are any red flags there, you can bet your bottom dollar that a lender is not going to want to secure a mortgage onto a property when they know that that is the potential end provider. So those are the kind of things that an applicant can do to decide in terms of whether they want to go into business with that provider or not, to be fair. But there's not, I wouldn't necessarily say there's, war and peace that we would expect to see on that existing lease agreement. So fundamentally, what we're looking for is who's the landlord, that would be our client, who's the tenant, that would be the provider, how long is the term. So again, from our policy standpoint, anything up to 7 years then is eligible for across all our standard product ranges. There's no insistence on break clauses. So sometimes you will get some lenders that will say, no, we want to see a break clause after a year or 2 years. So we don't even ask for that. Then obviously we're looking at the value of that lease. So how much are they actually agreeing to pay on a monthly basis? And more importantly, like what I touched upon earlier, whether that lease mentions anywhere within it that it permits subletting. So as a lender, we don't allow that. So that's the main thing that we're looking for. So those are the main initial checks that we will look to do. Of course, on the back end, when it gets to completion stage, we would expect the solicitor also to do their own kind of professional review of the lease to make sure everything is aligned. But as long as they're happy with it, then from our standpoint, And from any lender's standpoint, as long as their legal interest is protected, then they're happy to proceed on that basis.
Okay. Thank you. Thank you on that. So we get a lot of adverts. I mean, for me, I've been dealing with a lot of supported living cases and similar.
Mhm.
Um, you obviously get tracked from what you're searching and stuff. So you
Of
get a
course.
lot of adverts talking now about government backed scheme for investors and stuff. And what at, again, like anything, there are quality people in that space, and there are people that are just maybe selling training or selling courses and stuff, which I think is the next thing that's going to be the big the big noise going around in terms of government banks, investment and stuff.
Mhm.
What do you see? What's the mistakes do you see people making as an investor in this kind of space? Especially maybe for people that are coming in new or
Mhm.
people that have a portfolio, they want to move it into this. Then even similar stuff, I've got other clients that feel like, okay, we've been doing service accommodation. We want to repurpose our property to be able to do this. How do we go about it and stuff? What it's definitely getting more popular. So what should people be careful about?
I think the main thing really is lenders still do not like guaranteed rental schemes. And like when I say guaranteed rental schemes, is where you are then leasing your property to an estate agency who are paying you a guaranteed rent, but then at the same time, the lenders have no control in terms of which tenants they're going to place in that security. So that in itself is still in place. So there are a lot of lenders that don't like that. And sometimes it is very easy to get the lines misconstrued between the two and go, well, wait a minute, this government backed provider is guaranteed rent and this is guaranteed rent. So surely this is both the same thing. They're not. So the main thing to emphasize is that if you're going to have a corporate lease agreement, it has to be with the end tenant provider. So if you've got it directly either with the council or with a charity or with a mental health organization, whichever, that's absolutely fine. But you have to be very careful that you're not letting your company to a middle agent or middleman or an estate agent who then subsequently will then have subleases that will be created off the back of that, and then they will then be making their own kind of income from that perspective. So yeah, the two are very, very different. So just make sure if you're venturing into that space, the contract in itself is directly between you and who in fact will be living in that security or who will be putting the tenants there. Not so much so these kind of ones that I see floating about where you walk around, you see those billboards, and it's like, yeah, we will give you guaranteed £4,000 a month, and you're like, well, who is it? And it's some unknown estate agency that's promising them that on a 2-3 year contract. That in itself won't fly with a lot of lenders, to be fair. So those are the main red flags that I would advise to look out for.
Okay. Thank you very much for that. You touched on something in terms of the current market situation and stuff. So, how does the current um, economic climate, looking at the interest rate changes that we're just seeing, housing market shift, the pricing on mortgages, because it's interesting sometimes the way the pricing on mortgages. Some people give low interest rate, high product fee, and some just give the middle ground. And sometimes people don't realize it. People say, "Oh, I want to get a mortgage. I can get mortgage for 2.7." I say, "Yes, you can, but are you ready to pay 5%, 7%,
Exactly.
or whatever?" People don't really understand that. So, how do you see that? I mean, generally in the market, what's the trend, and how is that shaping the experience of most investors in the market?
I mean, probably the biggest thing that I would say is that we've gone to a climate where now there's a lot of pricing that's being done by a lot of lenders that are already forecasting already the drops in the Bank of England base rate before they've even happened. So a lot of the time, I used to have this conversation a lot of the time with brokers where as soon as the Bank of England base rate dropped, you would get brokers calling me 24/7 going, Zoo, when's the rates dropping? And then you're like, actually, that's already been pre-forecasted. We already knew that the Bank of England base rate was going to drop by this. So, that's it. So the lenders already forecasted that 6 months before into their pricing model. So
Yeah.
now that's why you're not really seeing that much pricing changes. And that's more to do with lenders that are linked with the BOE. Where you've got lenders like ourselves that are a securitized lender, our funding lines are going off the swap rates.
Yeah.
And the swap rates are more linked with the inflation. Now, when you look at where inflation is, unfortunately, it's not going in the direction that we want it to be going, especially when you look at inflation now on the price of food and stuff. It's almost doubled. So that's where, unless inflation starts to decrease, that's when you would expect to see, especially securitized lenders, where the rates then will start interfering between the swap rates coming down. As soon as the swap rates come down, that's when then benefits then be passed on to the rates dropping. So for the time being, do I think rates are going to stay where they're at? Definitely. I think if inflation keeps rising the way that it is rising, I will start to see rates starting to increase, if I'm really honest with you, towards the latter part of this year, or definitely leading into September or in October. So any kind of investors that are assuming that rates are going to become much cheaper anytime soon, personally speaking, I don't necessarily see that happening.
Okay. Yeah, thank you for that. Thank you. So, I know you've got different angle to what Quantum does and what you play in the market. Well, before we move into other things, still on the topic of supported living and social impact and stuff, you talked about the vulnerable clients and stuff. Again, people just ask the question, I mean, if it's guaranteed rent from a um, quality provider, what
Yeah.
is the risk to the lender? Why are a lot of lenders risk averse about um, providing this kind of service? Knowing, on the other hand, there's a lack of um, stock or lack of availability for people that are in this sector.
Mhm.
And it's like, are they being um, is there a bias against people that are vulnerable? I don't want to deal with them or so because it looks like as guaranteed elements of this, lenders should get their money. What exactly is happening, and why is the industry not taking a wider approach to take more social impact investment into
I
into
think
play?
I think to be honest with you, looking at the amount of lenders that are now willing to look at those type of cases compared to what they were a couple of years ago, I definitely do think that the stance towards it is definitely changing and changing more for the positive. So it's one of them ones where yes, was it one that was looked at and frowned upon before? Definitely. But I think also at the same time as well, there's also the legality of it all, and where you become going down you have to approach it completely differently, especially when there are vulnerable tenants involved. And fundamentally, that's what everyone has to remember, whether it be a lender, whether it be the landlord. If you've got vulnerable tenants residing in your security, it's a completely different approach from a legal standpoint in terms of how you approach that whole process, or if a lender ever had to go down the proceeds of repossession or anything like that, to be fair. So that in itself, when you compare it to, do we go down the route of where we just deal with the vanilla stuff, or do we go down the route where potentially legally there's more things that we have to take into consideration? I could, to an extent, see why certain lenders, or especially high street lenders, decided to take the route that they did want to take. But in recent times, I'm seeing more and more lenders now venturing into that space. And I think the more you can see it interlinking now, where beforehand, and on a separate matter, when it came to limited company buy-to-let applications,
Yeah,
there was no one, Deji. Like literally, there
true.
was a few, but now all of a sudden, you see high street lenders now getting into partnership with specialist lenders to say we're now going to be doing limited company buy-to-lets. So I think the high street now are definitely looking at these specialist lenders and either getting into partnership with them. Some of them are even buying them outright and having them as part of their group.
Yeah.
Um, so do I think in the next 2 to 3 years, will I be sitting here with you saying it's only going to be us and maybe a few others that are going to be, assisting vulnerable tenants. Definitely not. I think it's just the start of something, and fortunately for us, we're one of the few lenders right at the very beginning of that to be able to assist those type of cases with very competitive kind of buy to let rates. So yeah, I'm sure the competition will only grow over the next 12 to 24 months.
I think very true. So from what you said, I remember uh, less than 6 years ago when buy-to-let complaint structure became the noise, became everything. Very few lenders were doing that. Even more so, no lenders were actually doing interest only. I
Yeah,
think it started with repayment, then over time it's grown to be, I believe the last stat I saw, maybe over 50% of application limited complaint structure. So yeah. So I think that makes sense. If based on where this is, maybe in the next 5 to 10 years, we would expect to see more interest or more availability for this sort of social impact, supported living, and all of those things. And people become more familiar with it as it grows. So I think
exactly.
that's the right thing to say. Okay, all right. So is there anything else you would like to share around supported living? I wanted to move to some of the other things you're very good at.
Mhm.
But before we make that shift, is there anything else around social impact, supported living, assisted living kind of stuff that you would want to touch on?
Yeah, I mean, the main thing really to emphasize is a lot of people that may be thinking of getting into that space may be making the assumption that they have to have experience. They have to, have pre-existing buy-to-lets with these providers to be able to do it. But I'll give you a perfect example. Here at Quantum, we even allow first-time buyer, first-time landlords to even acquire their first property. And if you said to me, okay, Zoo, this 18-year-old who's buying his first buy to let, he's got no other property, but he then wants to go and put a 5 year lease in place with this vulnerable tenant provider. We're absolutely fine with that. So not only is it towards the more professional landlords, but we're also catering towards the newly seasoned kind of landlords that are now coming into that space. So don't assume that you have to have experience to be able to do this. So you can necessarily come in as your first buy to let and get those corporate let agreements into place. The vulnerable tenant providers, just do your due diligence, do your research. But the fact that you've got lenders like us that don't even restrict you to say you can only have contracts with this, that, and the other will allow you to go and negotiate the best terms that you can get with whichever provider that you want to go ahead with. So again, just get a draft copy of that lease, give it to your broker. He can then obviously speak to professionals like myself, and then we can necessarily see how best we can assist you. But yeah, it's a massive market. It is underserved to an extent, and that's where we're obviously coming in to obviously bridge that gap and help those that want to go into that area, be able to get buy to let mortgages at respectable rates.
Okay. Thank you very much for that. So just something off what you just said. So maybe for a bit of expansion on that. So a lot of lenders would require you to have providers that are on registered provider list.
Yes.
And what you're saying is the fact that you are not restricted to registered providers. You
Yeah.
can work with other people as far as they meet your criteria and stuff. So I think that's an important thing just to highlight for people that don't understand what I mean. So yeah, it's still a growing market. There's a lot of people, there's a lot to learn and a lot of things to, and this is one of the reasons why I thought if we bring you on board based on your experience dealing with a lot of applications. You're possibly one of the the leaders in this space. So it would help people to actually start to understand what do I need to do from a investor point of view. How do I start to understand the mortgage stuff and then speaking to the right mortgage broker? Because as you know, not every broker is clued up about this. So that's just
100%.
something.
Yeah.
Yeah. So you mentioned something which is very creative, and a lot of people wouldn't even understand this. So this is something I want you to share more light on. So there's an opportunity. We talked just before we started the recording about Article 4 area, HMO licensing, and um, social impact. What is the opportunity there? What can people leverage, and how can they make this work for them?
Okay. So, I mean, most commonly, funny enough, is the one that an area that I'm looking at quite a lot with the number of applications I'm getting through at this moment in time is, people that are looking to acquire HMO properties or convert properties into equivalent of like HMOs in Birmingham. Now, Birmingham has an Article 4 direction use that's been applied across the whole city. So, in essence, the council have said no more HMOs. Like, that's it, we're done. Now, what now opens up the doors to be able to acquire assets that can be used as a HMO, but not necessarily have to have a HMO license, is when you've got a corporate let agreement with a vulnerable tenant provider, because there are vulnerable tenants residing in the security. Most local authorities in the United Kingdom will deem that to be exempt from HMO licensing. So, therefore, that Article 4 direction doesn't apply to that security. So, then that enables you to be able to still buy properties in areas that have these Article 4 directions in place. But because there's no mandatory requirement for you to have a HMO license, regardless of the fact that you've got more than three occupants living in the security, that in itself still won't act as a deterrent for you to invest in those areas. So you will have some professional landlords that only want to buy HMOs, and because they can't get a license, they'll be like, okay, we're not going to concentrate on that area. But for those that are neither bothered whether they can get a license or not, that would be a potential commercial route to look at to say, okay, we still want to buy properties in that area. Yes, there are going to be more occupants that technically mean it would need a HMO license, but because they're vulnerable, then we don't need one. Therefore, it still means we can still go ahead with it. So that is something that I would definitely stress to all the investors listening to this to still look at those areas. And there are some fantastic prime opportunities still available to invest in them places.
Yeah, and rightly so. This is a massive opportunity because, as you know, a lot of people want to do HMO. I mean, in some other settings or some other investors I talk to, there's a saturation of HMOs and stuff, and focusing on professional tenants. And yeah, this is a massive gap where even taking it to the next stage where people could buy property under market value, maybe auction property. We configure that to increase the size of the property, maybe loft, maybe extension, and then turn into an HMO. Um, Obviously, forcing the value of the property up, and as an investor, they can then give it out to um, providers of care. That would then mean that they get very good cash flow on a consistent basis for a long time. That's very, very good stuff that people should be looking into. And as a plug, in Property Concierge, we have some providers. So there's a demand for property for houses. So for any landlord, for anybody there that has properties and they are looking for the right providers, we have those relationships that we can plug you into because there's that opportunity for you to tap into. So either you've got your property and you're looking for um, providers that would support you to be able to get the exempt license for HMO purposes, not having to be restricted to Article 4, then we can speak and we can help you out on that. So thank you for bringing that up. That's a massive opportunity, and definitely I see a lot of people tapping into that. That's going to be a big stuff for a lot of people. So thank you. So I think we you've given us a very good foundation, modern foundation around social impact investing and everything you need to know around these, around the agreements around the leases and how everything is structured and stuff. And more importantly, working with lenders that can give you very, very good rates. I think that's something that's very important with very less restriction. Because from a broker point of view, one of the things we see when we want to place cases like this is there's a lot of restrictions, which means that it reduces the number of potential lenders we can go to. So for um, yours is being like a fresh of breath, fresh of breath for people to know, oh, there is an opportunity we can tap into. So thank you for that. So um, before I let you go, I know you've had experience from other, you've been in industry long enough to, and you guys are doing some lot of unique stuff. So with Quantum, there's other aspects to some of the unique stuff you talked. I think we've talked about two. I'll allow you to share about that, and maybe if there's anything more that you can take on. So maybe if you just take the first one, explain what it is, explain the opportunity for people that wants to look into it, and then I can ask the next question.
Yeah, for sure. So, I mean, the main one that probably sticks out when Quantum first launched is the fact that we do day one remortgages on the open market value. So, Deji already touched upon the fact where you've got the opportunity to buy properties at auction. So, let's say an example here is you buy, a dilapidated property, let's say for £200,000. You've got family that already work in the trade that can go into the property, carry out some renovation work, but then you say, okay, we bought it for 200, but we think now it's worth 350.
Yeah.
Most lenders will insist that you have to wait 6 months before you can remortgage on that £350,000 value. With Quantum, you can do that within 24 hours of buying the property. So whether it's dilapidated, whether you bought yourself a fantastic deal, maybe it could even be an inter-family purchase. Maybe, your auntie, your granddad, your grandma might just want to sell the property to you and sell it at a significantly reduced value. That's absolutely fine. We won't necessarily be one of those lenders that will look at what you bought it for yesterday and say, we're going to restrict it based on what you bought it for. So we'll look at the open market value. So on day one, within 24 hours of you having that TR1 form in your hands, you can then get 75% or up to 75% of the open market value. So that I would say is probably one of the biggest USPs that we have. When we look at flats or properties in ex-local authority areas, one of the biggest pushbacks that you tend to get with a lot of lenders is they insist on a minimum percentage of private ownership, either in the area or in the block itself. So with us, we don't have no minimum requirement whatsoever. So if you do come across any ex-local authority properties, regardless of how many private owners there are in the area, we don't mind whatsoever. So if you see some fantastic opportunities, and you tend to, if I'm really honest with you, you tend to in a lot of ex-local authority areas, properties that are either being sold on the value, or, ones that are, now when you think about it, growing up in London my whole life, there are areas now, funny enough, that I think back to my childhood where I look at it now and I'm like, they're total polar opposites. One area, for example, I look at is Battersea. Those that grew up in South London, I can promise you now, Battersea was not what it is now. So
100%, yeah.
So you look at the redevelopment that's gone on there, but there is still a significantly high percentage of social housing tenants within that area. So you've got Battersea, you've got Vauxhall, you've got Stockwell. So again, sometimes you will come across flats within that area where you're like, oh, but it's in a 15-story high ex-local authority block, but the potential on the rental yields on that, because you've now got fantastic transport connections nearby and you can travel into the city within 15, 20 minutes, it's a lucrative option there for landlords to look into. So, ex-local authority flats, properties that are situated above commercials. Most people, funny enough, when you walk the high street, you see these flats above kebab shops, pubs, bars. You think to yourself, oh, it's going to be impossible to get a mortgage on those type of properties. We will do that. So don't ever look at any commercial type and assume that you can't get a competitive buy-to-let mortgage on it, because you have lenders like us that will give you up to 70, 75% mortgages in them instances, regardless of the commercial type that that property may be situated above or next door to. So again, sometimes you do have some experienced landlords that have had some very bad experiences in the past.
Mhm.
But now things have changed. There are more specialist lenders now than there have ever been.
Sure.
And the options now are wide and great, to be fair. So anyone looking for properties within that space, I would say, has a fantastic opportunity there. Um,
Thank you.
what else, Deji? I'm sure there's something else in your mind because I know we discussed before about
Yes, so
share purchases and
yeah,
stuff.
there's one other big space you opportunity you mentioned. You just drop it now. It's how people can buy property.
Mhm.
I mean, in most people buying property understand I go to the open markets, find a property and stuff. It's usually um based on personal selling and stuff. But
Yeah.
since we've had the influx of a lot of property being bought under limited company structure,
Mhm.
as a fallout of that or as a follow on that, now it's for savvy investors seeing that as an opportunity. But I'll let you to share about what the opportunity is, and then what should people be looking at and how can they leverage that space.
Okay, no problem. So the topic that obviously Deji was just touching upon there is in regards to the fact that now you've got lenders like ourselves that can facilitate people looking to purchase the shares within a limited company. Now, the major perks in regards to that is, and to explain it in very kind of simple layman terms, is where you've got a property that already owns properties within it. When you buy the company, you obviously buy the properties within that. But because that company already paid the stamp duty for those properties initially, and because you are buying the company, then you're not going to pay the stamp on those properties again. So that's the lucrative point number one. Now, number two is at this current moment in time, and obviously subject to change, the charge to transfer the shares is 0.5% on the purchase price of what you've bought that company for. So if I buy £1 million limited company, and let's say I come to an agreement with the person who's selling it, and they say, okay, I'll sell it to you for 750,000. I'm only going to pay 0.5% for the transfer of shares at that £750,000 purchase value, even though the property that sits within it or the properties that sit within that company are worth £1 million. So that's the other added benefit because, of course, when you come to those kind of business negotiations, there's a lot of things that people take into play. So, the capital gains that you're then now going to be taking on board because obviously that person is selling the company to you. So therefore, now if you sell those properties in the future on the open market, it's going to be you that's going to then have to pay the capital gains on that. So there are a lot of things that you have to take into play. So this is why when you're buying the companies, you can then find ways in which to negotiate, okay, this is what the open market value is, but if I factor in the future kind of tax bills that I may incur,
Yeah.
then let's negotiate what I'm going to buy this from you for. So this is why you tend to find there are so many opportunities within that space to buy these limited companies direct. Now, when someone says to me, okay, what kind of savvy ways can I use or what kind of financial ways can I use to fund these purchases? Because it's a potentially a below market value transaction, with the bridging and quantum do bridging. So this is why I'm going to use quantum as an example. But of course, you have the whole of market when it comes to bridge, and brokers like Deji will be able to advise you in terms of who would be able to give you the most funding on day one. But an example that I would use is when it comes to below market value transactions, quantum on their bridging proposition will give you up to 90% of the purchase price. So let's say that example that I just gave you there, you're buying a £1 million limited company for £750,000. That means then deposit wise, you're putting £75,000 towards the purchase of that company. Now, once you have bought that company, and if you recall the policy that I just explained earlier about day one remortgages on the open market value, you can then, even though you bought it yesterday for £750,000, you can do a day one remortgage on that £1 million value at 75% and pay off your whole bridge as well as get your deposit back with immediate effect. So you can see the opportunities there are endless, not only to get the money back that you initially contributed towards the deal, but also at the same time being able to leverage off the higher value that you've just basically taken on board, even though you paid a fraction of that cost just yesterday. So there's very few lenders in that space that have that flexibility. And the fact that you can obviously explore those kind of avenues with lenders like us, hopefully should give you more food for thought in terms of what to look out for. But you can when people say to me, okay, but how best do I go about finding about these opportunities? Honestly, the same conversations that I have with my brokers on a day-to-day basis is stay close to your accountant, stay close to other accountants, because there's no one that knows the limited company's affairs better than a chartered accountant.
Yeah.
So he can already make the business introduction in play. Whether it's someone that goes, do you know what, Deji, I've had enough. I just want to get out of the game. That accountant could go, okay, really? Okay, let me call my friend Deji and let him know. He can then obviously make that introduction then to someone that he's already spoken to a few weeks before saying, if you find someone, let me know. I'm interested. So accountants are a fantastic professional network individuals to get close to. Brokers at the same time as well, because you brokers obviously have a range of clients that you look after.
Sure.
So they also speak to you guys as well, and that in itself opens up opportunities. But there are also, very interestingly enough, there are ways that you can go into company's house and you can put in the property SIC codes and you can see a whole list of them that potentially could be going into receivership or are those that are in arrears. So funny enough, that's what I know some property network individuals or property sources, they do on a daily basis. So they put the property SIC codes in there and they can see which ones have either gone into receivership or potentially are going down that path. So there's nothing stopping you from making that direct contact with those individuals, because remember, company's house, you've got all the information there, the name of the directors, the name of the shareholders, everything. So you
Yeah.
can also look for those kind of direct route kind of approaches as well, to be fair. So yeah, hopefully there's a few things there that I've mentioned that should hopefully interest a lot of people.
Yeah, definitely. I think just what you shared is what a lot of people go on a 3-day property course for to just to have an idea of what that is. So definitely very valuable. And I mean, from one of the things you touched on, I think for me, I mean, maybe part of my previous life is being an accountant, qualified accountant in the UK. So I got a lot of relationship around accountants, and I know without any doubt, there are a good flow of potential like this. So because that's what comes to their table, that's what they're dealing and stuff. So definitely a good place to look at. And yeah, other brokers as well. So we tend to know or hear what people are doing with their investment, with their property and stuff, and what they're looking to do. So definitely would be a good stuff. So talking about you mentioned about your bridging and other opportunity to place a few cases around your bridging and stuff. But there's just something, I mean, most times as an investors, what people usually do when they go for bridging is would go bridge with a lender, and then maybe we'll go and do term mortgage after the initial period. But there's
Yeah.
something unique you guys do in that space. So could you just maybe touch on it quickly, please?
Yeah, of course. So with our bridge and proposition, what we allow is if the applicant goes and acquires that property, there's nothing stopping that applicant from doing a day one remortgage straight off that bridge, but using that same valuation report as well. So the biggest thing that tends to catch out a lot of applicants is when they do the bridge, that's one valuation cost. But then when they go to a different term lender, they either need to pay for a new valuation or they need to pay for a retype of that same valuation report. And Deji will probably tell you those retype costs are no longer cheap anymore. In some instances, you're paying the same price as what you did for the original valuation. So the fact that you can go to one lender, do the bridge with that lender, same valuation report, and then exit straight out onto the buy to let term product, that in itself opens up even more opportunities. And, if I can't emphasize enough the fact that it's very rare to find buy to let lenders that allow you to leverage out against a higher property value on day one, even if there was no works carried out to the property. So there's no insistence from our part to say that you have to carry out works to justify why that property now is worth more. You could have just got yourself a fantastic a bargain. You could have bought that property under market value because you're buying it from a family member, a friend, whoever. So there's no punishment there from our side to say, well, no, because you got yourself a great deal, we're not going to allow you to then borrow on the open market value. You can do that straight away. So
Yeah.
the benefit that you've got a bridging lender and a term lender that can offer that facility, then from a broker standpoint, it becomes a dream because they have a one-stop shop. But also from a customer standpoint, that also plays a big part. And the fact as well that we have no restricted conveyancing panel. So we'll allow dual representation on all of our cases. So to elaborate on that, most lenders will allow you to have your own solicitor, but only to represent you and not the lender. So
Hmm.
the fact that we allow you to use your own solicitor, both for ourselves as well as you, not only saves you money on your legal costs, but also allows you to build up trust that this is a trusted individual that has looked after me on all my other buy-to-let cases. So the fact that he's going to be doing the legal work for both of sides gives me even more confidence that this mortgage will go through and proceed to completion. So that in itself as well also gives investors that place their mortgages with us even more kind of assurance.
Yeah, very rightly said. I think one of the things on that is the speed as well. There's no one of the like you said previously, one of the things we don't have control over is solicitors. But when you
Yeah,
start having solicitors that are doing dual representation, it makes a big difference
yeah,
because you're not raising inquiries from one, sending it to the other. Then there's this back and forth going on and it just delays. So they know they are dealing with both parties and then they make things work quicker. From
mhm.
my experience, I've seen that that saves quite a significant number of time and a lot of stress because from an investor, again, most investors say, I mean, I think last week you went, oh, what are they going to ask me for my blood now and stuff? So sometimes it feels from an investor that the lenders want to get your blood for them to be able to give you a mortgage. But when some of this is being simplified and streamlined, it just make it easy. To me, and there's not too many questions asked to the on this. What have you done with this? So, okay, so it makes a big difference on that. So thank you for sharing that. Zoo, you have shared some wonderful things here today. Really appreciate your time. I think for me, it's really, we've talked on and on, and we've had a few transactions going on, a few transactions completed. I know your onions. You're very, very good. You're very responsive. So I appreciate your time on this. And I just see from the questions I have from my interface with a lot of investors for what I get involved in personally as well. I know this is a growing space, this is a growing demand. And I said I'll take the time to share some things that people need to be aware of. And without any doubt, you've added massively to the level of knowledge and what people can do. So it's one thing getting the knowledge, it's another thing getting the implementation. So um, for any investor listening to the podcast, what's important is you now have a better overview, a better knowledge than you possibly would have. But more importantly, there's a lot of nuances that you won't have thought about. There are a lot of things that we can speak up. Your situation is completely different. The scenario you have is different. So would welcome you to have conversations and we can then start to interface with more experienced lenders like Zoo and stuff and get help you to get your mortgage, your property investment to the next level. I think this is what this is about. You are not the high street lender. You're specialist lenders and you try to help people that are creative in terms of their thinking, what do we need to do? How can we up our game and stuff? So for anybody looking to up their game in terms of property investment, definitely this will be very valuable knowledge to have. And more importantly, knowledge is one thing, but implementation for me is the most important thing. So if you have any cases, I think the best thing is just to bring that forward. Let's have a discussion, check in, and get you the right step forward. So, really appreciate your time. Before we let you go, you've got a lot of wisdom to share in the industry. Where do you see the industry going in the next 5 years? And what are the opportunities that people should be looking out for? Yes, we've talked about supported living and all of those things. There might be something bubbling that people are not aware of. What should people be looking at in the next 5 years and preparing themselves ahead?
Probably the fact that the buy-to-let space, if I'm really honest with you, is probably going to become more regulated than it has ever done in the past. You know, you can see the regulations coming in soon now around the EPC ratings. So you've got a lot of landlords, to be honest with you, that probably think is something that is being talked about, but nothing will come off the back of it. I can promise you, there's going to be some serious stuff done with where properties will have to have a certain EPC rating. So that in itself will mean that there'll either be a bunch of properties that will require a significant amount of work to uplift their kind of value and to get their EPC rating to that kind of level, or those that will already meet the guidelines. So if anything, if I'm an investor right now, I'd be sure to stay very close to what the new regulations will be. Also, if you've got HMOs in areas, stay close to what the local authorities' updates are, because you do have local authorities that consistently update their guidelines. So when it comes to renewing your license, you don't want to get caught out and believe that your property is compliant when now it no longer is, based on updated criteria or changes that they've implemented. But more so than not, when you're not sure of anything, you've got, like I said, individuals like Deji that you can reach out to that speak to people like me on a daily basis. And it's like with anything in life, if you need to lean on someone, you lean on to someone that is involved in that space on a daily basis. Deji's not going to call me when he hears his car rattling with the noise. He's going to call his mechanic. But when it comes to something to do with property, you can bet your bottom dollar that me and him will have a very frank conversation. And, we can always pre-warn applicants in terms of, okay, you didn't think of this, but this is something that you should be thinking over. So definitely the buy-to-let space has got some more kind of stringent rules that will be coming into play, which is another reason why it's leading down the route of getting people to look into alternative means now through corporate let agreements, this, that, and the other. So yeah, all I would say is those that are looking to come into that space, just expect that there will be much more stricter guidelines in the next upcoming years. So, I think definitely the way that we've probably seen in the past, where you've had one landlord probably have a small buy to let and maybe another, I don't think they will exist anymore. I think literally you will have only people that are professionals within that space that have a few properties or a number of properties, and they'll look to grow upon that and move into that kind of area.
Thank you very much. Rightly said. Any living parting words for people? I know you shared a lot and you do a lot of similar podcasts. You have very good level of experience in this. Yeah, is there anything you would like to share? Are people, just follow some of the things you do?
Yeah, no, just
Um,
again, all I would say is the opportunities are endless within the property market. Don't overthink something. Lenders are open to outside investors. So, even with ourselves at Quantum, if you want to go into setting up a new property limited company, but you've got family based overseas, you want them to be shareholders of that limited company, that's absolutely fine. There's no issues there. A lot of the time there was a lot of concern of, oh, but my brother, but he's based overseas, he lives in this country or that country. There's no issues there whatsoever. It's just about being very transparent with your broker from the outset. So then when they speak to individuals like me, we can advise them how best to present that case. Or if you haven't set up the limited company, how you should set it up. So then you can have that seamless process when it comes to applying for your mortgage. So whether it be outside investors, money from overseas, purchasing properties in area that are slightly run down, but again, you're going to do some renovation work and uplift that value. Yeah, nothing should be frowned upon. Honestly, the opportunities are endless. There's different ways to finance those kind of deals, and when you speak to professionals like Deji, they'll be able to guide you properly. So yeah, please lean on to that professional kind of advice that you guys can get and take it from there.
Thank you very much. I know we can still go on. There's a lot more we have talked about behind the scene. There's a lot more you guys do, but I wanted to just keep it. Maybe there might be other section we want to bring you on just to highlight that. But you've dealt very um, extensively with the social impact investments and a lot more than that. So for anybody listening on this today, you've got more than enough information and knowledge shared around social impact, either for assisted living, supported living, social care, and everything in between, and what vulnerable clients or guaranteed rent looks like and government banked incentive and stuff. So there's a lot that's been covered in this podcast, and we cannot thank you enough for coming. Thank you very much, Zoo. And
Thank you
I
for having me, Deji.
know very much so we will possibly bring you on board again, like I said. Yes, there's a lot more we could delve into, but not today. So thank you for your time. Really appreciate that. And for anybody listening, if you want to reach out to Zoo, just get to connect with him either on LinkedIn and stuff. We would share his details in the show notes and anything. I mean, it's for me, yes, you can get directly to speak to some people. They can help you directly, but knowing what is happening or keeping yourself up to date with what is happening in the industry, you will get a lot of value from connecting with people like Zoo. So definitely from my point of view, even as a broker, dealing with a lot of lenders, definitely speaking to you always add good level of value. So we appreciate that very
Appreciate
much.
that,
So
Deji. Thank you very much.
thank you very much. And thank you. Enjoy the rest of your day, and
You
we'll
too,
catch up. We'll catch up definitely.
for sure. You take care. See you
Thank
later.
you.
Bye
Thank you,
bye.
everyone. Bye there.